Hey, good day, guys. Just want to talk a bit about a few stuffs where a lot of so-called gurus out in social media, on Twitter, or YouTube, are talking about a stock market crash. So the first person talking about stock market crash is the rich dad, poor dad guy, the Robert Kiyosaki, who talks about why will the latest stock market crash. Across the board, he talks about some major stock market crash is about to happen. When it's going to happen, he doesn't really know, but he said in 2017 it's going to happen, and clearly nothing like that has happened. Then you also have the guy Tony Robbins, the guru, who talks about another stock market crash is coming, right? I mean, is it coming or not? He mentioned it's going to happen in 2017. Nothing like that has happened yet. So that's that. And the third guru, Gary Vaynerchuk, Gary V, he talked the same thing about preparing for a stock market crash, right? I mean, they think that stock market crash is going to happen, and I beg to differ, right? A couple of few reasons why I do not think a stock market crash is happening, at least in 2017. A couple of things. The AAI sentiment, which is the sentiment survey of what is the major investors thinking. So this is the AAI sentiment survey, where people are simply asked a simple question each week: whether are they do they think the market is going to be bearish or whether it's going to be bullish, right? So I mean, if you look at the survey results for a week ending August 30th, 2017, the data represents what direction members feel the stock market will be in the next 6 months. So overall, you can see the decline in the percentage of people being bullish. So a lot of people actually think that markets are not really that strong. So 25% of people think it's going to go up, 35% think it's going to be neutral, and almost 40% of the people, there's a jump of 1.6% thinking that, you know what, market is actually going to be bearish. Now, keep in mind, stock market, right? Stock market is a place where it's going to prove most people wrong. Now, if most people are being bearish, chances are they're wrong. I mean, just by the base of the theory that if everybody was right, then everybody would be a millionaire. The chances are not everybody is right. Most of the people actually go broke investing in stock market. So based on the contradiction theory, bearish, if more people are being bearish, chances are market are there's still a lot of people probably trying to short the market, and that's why their market starts to run up. It's going to be these people are going to feel it because they started to cover their shorts. Another thing I want to talk about is in terms of sector rotation, right? Market is generally bearish when there is money being pulled out of the market. So I want to take a look at the 50-day moving averages. So let's go through individual sector analysis, right? Let's go through the full index first. So let's look at the spiders. So I want to look at the bigger picture to make sure we understand what's going on. So in terms of S&P 500, right? I mean, you look at this, is there a reason for you to be bearish, right? Are these market extended? They are extended, but they're not going at 90-degree angle. I mean, this is a regular market uptrend. Can there be a big downturn? Probably could, but as long as it's holding these levels, then chances are still market's doing okay. If you look at the QQQs, new highs, right? I mean, there was some hesitancy over here, but then if you look on this, new highs. Even the most speculative name sector, which is IWM, it's just going sideways. I mean, you don't really see the market starting to break down or anything like that, right? So these are weekly charts on here. So don't really see any major destruction happening on here. If you look at the individual sectors, let's go through each. Um, let's start with the consumer discretionary, which is the XLY. So consumer discretionary really tells about the name suggests. Are the consumers willing to spend money on something which is discretion? Discretion is something which is things they don't need, but they are willing to go and buy it. If you look at this sector, I mean, people are more than happy to go and buy it. I mean, that's why all the stocks in this sector are probably doing okay. That's why you see this market is actually doing really well, right? On the other side, you have the technology. Technology are hitting new highs. I mean, there is no short on this sector. Industrials, Industrials, which is one of the leading sectors, if the market were to go south, and industries are supposed to slow down first before the economy slows down, right? So industrials are still pretty strong as well. Uh, materials, materials are heading to new highs, right? If you look at the consumer staples, so XLP, uh, this one is not really in the bear market territory. I mean, this is not really a downturn. I mean, it's still tracking long over here. Then you have the healthcare, which is a lot of money has flown into this sector in the last couple of months. So, I mean, you're seeing it hit new highs as well, right? Then you have the utilities and financials. So utilities are still right up there, and so are the financials, right? With the financials, interest rates being so low, chances of the rates are only going to go up. If interest goes up, banks make more money. That's really the thesis. So there's nothing, when you look at the S&P 500, the Qs, the IWMs, the individual sectors, there is no reason to be bearish. I mean, markets are on a tear right now, right? Some of the mega caps, if you want to talk about something like Apple, right? Apple are hitting new highs. If you want to talk about Amazon, Amazon is still looking good. Then you have Netflix, right? I mean, is there a reason for you to be bearish? I mean, bearish is something like when markets are really looking crap. Or if you look at the big name Google, or if you look at Boeing, right? You look at the um, house housing sector, the PHM. You don't want to look at McDonald's. I mean, everything is kind of hitting new highs on here, right? Do you see anything bearish on here? I don't see. And next we talk about no distribution days, right? So in terms of this, for a market to really go south on you, there has to be a distribution in the market. By distribution, I mean on the week when the markets are down, there has to be a lot of heavy selling, right? Maybe something like this. When the markets are down, you have a big bearish. When the markets are down, big volume. Markets are down, big volume. Markets are down, big volume. So this is a kind of something which went from 208 to 190. So actually 210 to 180. So this was a bit of a panic on here. But after that, I mean, you don't really see any big dip. I mean, it did dip a few, maybe 10% on here, but then look at this thing go, right? Because you have 210, it went down almost, what's it, 30 points, so 30 over 210 nonsense, or 15 something percent, right? But then the market is on a tear. I mean, you don't really see markets being down, but there is a lot of distribution days starting to pile up. That's when you see a market crash, right? Or even for a stocks per se, right? Something like we can talk about. Um, the best way to really look at it, distribution days, is when you see something like, let's put it on a daily chart, right? When you start seeing a whole bunch of distribution days happening over here, or something like maybe GoPro, which got destroyed, right? When you see a lot of distribution days over here, then you can see there's a bear market, right? I mean, that's when things happen. And clearly, a bear market, generally the market would decline to 10 to 20%. That is just a correction, right? If the markets were to decline by more than 20%, that is going to be considered as a bear market. So all these gurus, Robert Kiyosaki, Tony Robbins, Gary Vaynerchuk, were talking about a some market crash to happen in 2017. No, it's not going to happen. So hey guys, if you like the video about the market analysis, feel free to like and subscribe. Gonna appreciate it, and gonna be pulling out more videos, keeping you on track on what's going on in the market. Any questions, hit me up at Twitter at watchliststock, or email me at swatchlist@gmail.com.